afternoon from Los Angeles. It's Tuesday, May 7th. I'm Melissa Corum here with Justin Nielsen, and we have a look at the stock market today. And on today's show, we're going to be continuing our conversation around lessons from earnings season. So we're going to be taking a look at Nexstar Media as well as Etsy, and an update on Twitter after its gap up not too long ago. All right, but first let's take a look at the major indexes. We took quite a beating today. The small caps were the hardest hit, down about 2.5%. The NASDAQ finishing down about 2%, a little bit off the lows, but not too much. The S&P 500 and Dow down heavily as well. So what do you make of today's session? I know we've been climbing.
Right.
A pullback or some sort of consolidation was expected, but this was pretty widespread losses today.
Well, first of all, let's contrast it with yesterday. Yesterday we started off weak, we ended pretty strong. It was still down 0.5% on the NASDAQ, but we closed in the upper part of the range.
Right.
Contrast that with today, we started weak and just got weaker. The volume, in addition, while it was less yesterday, so we avoided a distribution day yesterday, we are probably looking at a distribution day today. I haven't looked at the final volume figures, but I can tell you that when I was looking at the hourly comparisons, it started off with a less than comparison in the first few hours, but that just got heavier and heavier as the day went on and the selling got worse.
Wow. And looking at this chart also of the NASDAQ with a technical eye, we like looking at trend lines too, right?
Yeah.
So is that a cause for concern if we're seeing the NASDAQ breaking below a trend line?
Yes. So, we talked a lot about support, and what we had been seeing is we saw the NASDAQ getting support at 8,000, we saw the S&P 500 getting support at 2,900, and the Russell 2000 had just crossed above 1,600.
Breaking out,
looking like all that's off the table now. We've broken support in all those levels, and if you had drawn a line just on the lows of either the NASDAQ or the S&P 500, you would see that we're below that trend line now too. So there's a lot of reasons for concern here. In addition, you've got that higher distribution day count that you're looking at. Yesterday we were saying it's not too much to worry about, but this is why we do the video every day. We're always doing the analysis day by day because things can change.
Yes.
And we're going to do it tomorrow because, who knows what comes out in terms of news. It could be very different tomorrow.
That's right. You gotta, put things into a longer term perspective, but be able to react in real time.
Right. And speaking of longer term perspective, what we're getting close to now is that 50-day moving average. So both the NASDAQ and the S&P 500 have a little bit of room above their 50-day moving averages, about 1% on the NASDAQ and less than that on the S&P 500. So that's kind of the next stop in terms of support.
And we know that stocks move a lot on earnings, or can move a lot on earnings, whether that's up or down. But again, going back to broader perspective, we like looking at market conditions because even the strongest of stocks can get weighed down when the market heads south.
Right. It's just, think of it as a huge headwind. If, you can have the greatest stock in the world, but if you don't have the market in your favor, there's just too much uncertainty, and it's really hard for stocks to move up against that headwind.
Well, with that in mind, let's analyze a few individual names. We have Nexstar Media pulling back to its 50-day line ahead of its quarterly earnings report. It did drop about 2.6% today, but looking at the earnings growth, it's been pretty strong. So how should investors be handling this stock given the fact that we're seeing this pullback with earnings right ahead?
Yeah, so one of the things we were talking about last week is, hey, if the market is a little bit sideways, that's fine. What we're going to do is look for those opportunities, those bounces off the 50-day moving average. And I wanted to throw this up there because this is a great example of a stock that's gone up very nicely, went up 20% from its last breakout, and now it's pulled back to the 50-day moving average. Normally, I would be looking at this as an opportunity. We'll see what the earnings look like tomorrow. It could still be, but if the market is not in my favor, I'm going to be very hesitant to put on any new trades to increase my exposure if I'm not sure which direction the market is going.
Exactly. So what should investors be doing during this time if we're continuing to see these heavy losses? Well, you want to be looking for stocks for your watch list, right? That are showing relative strength.
And you still have to do your homework. You have to be ready. That's what the watch list
Can't
is
just
for.
check out.
Right, exactly. Because this is especially a news-driven
Right.
event. We've got China trade. The meeting is Thursday and Friday. We don't know what kind of news can come out before that. So
Right.
this is very news-driven, and it could change in a heartbeat. That's kind of what happened on Friday.
Right.
Things were, not looking so great, and then Friday, economic numbers, everything's great. Birds are chirping, and everybody's singing. But that can change very quickly, based on news events.
Well, another name potentially for the watch list or the ready list with earnings coming out is Etsy. It's building a base, heading into the report, and trying to continue to hold support at its 50-day moving average as it's in this base pattern.
Yeah, so the big thing here is it's really formed this very nice base pattern. This is a stock that tends to move big on earnings.
Right.
The last 3 earnings reports have been very big for Etsy, but here again, we have to be concerned about that whole market headwind thing. So if the market goes up and can kind of shake this off, that'd be great. And if Etsy can show some extreme growth tomorrow after the close is when its earnings report is, that would be something worth noting. But we have to put that cautionary stance in there based on the market.
That's right. And with Etsy, if you look at the past several breakouts, some of them were followed by pretty quick reversals or gains being erased within a matter of a couple of sessions. So that's another thing to keep in mind on top of this market-related headwind that we're seeing.
Right, and the last report I think was a 50% surprise. So Etsy does have that tendency, but again, do you want to really increase your exposure if the market is not in your favor at the time? And Twitter gives us a good example of why you might be a little hesitant.
Exactly.
So if we turn over to Twitter, Twitter had a great earnings gap. So this is kind of like let's learn from past history.
Right.
Twitter had a great move on its earnings, and in fact we had this on both Leaderboard and Swing Trader. We took a very quick profit on Swing Trader, and what Twitter ended up doing was going sideways. Part of that was because of these market headwinds, and you also have to look at the fact of, okay, if the catalyst of the earnings report is kind of behind you and the market isn't in your favor.
Right. What else is going to fuel a
exactly.
move?
So you just, when you start weighing that risk and reward, that's definitely some little dings on the reward side. And if the market continues to worsen, that's a huge thing on the risk side. So that's where things kind of, the balance starts shifting against you. And so Twitter's just a good example of a stock that had a great earnings gap, but it hasn't really gone anywhere since then. And a lot of that is market related.
So for those who bought the Twitter gap up, what's the strategy here now?
Well, it depends on where you bought it. If this is something that you had before, maybe it's something you can hold on to, but I'm always very careful of, when the market starts getting weaker, I start looking at the stocks that I have the least amount of cushion on and any stocks that I have losses on. Those are going to be the first ones that I'm tossing overboard on my boat when I need to lighten the load.
Well, those are some great tips there, and more to come throughout the week as we will be keeping a very close eye on the market as well as stocks on the move, setting up or just in interesting positions with earnings on the horizon.
Right. Yeah, those 4 distribution days on the NASDAQ, that's where we start getting a little bit more cautious. So we'll see if we can kind of right ourselves from here.
All right, fingers crossed. And thanks so much for watching, everyone. We hope you check out investors.com for all the latest stock market news and analysis. You can also check out our content across social media on Facebook, Instagram, Twitter, and YouTube. So make sure you follow and subscribe to stay up to date on all the latest, catch our live videos, and other content. Thanks again for joining us, and we'll see you right back here tomorrow.